What's going on YouTube? This is Dave's Daily Trades, where I post daily AMC technical analysis, price predictions, and of course bring you the latest greatest news. Be sure to hit that like button and subscribe. So guys, a few interesting things that I'll be covering today, going over a quick technical analysis on AMC because things did look really good for today. As you can see, we had a lot of consolidation, but if you guys have been following me for some time now, you know that we absolutely love the consolidation at these range levels here. And then, of course, we will be touching base on Nscc 803 and what this means for AMC and other meme stocks in the future. So definitely stay tuned until the end because we'll be covering a lot. If you guys have questions, comments, concerns, definitely post in the comment section below and I will be responding to everyone. All right, enough of that. Let's jump into the TA. So guys, of course, we did have this resistance line here at just about $37.15, which we did break out of today in the morning. We actually had a decent gap up. Of course, we had a little bit of trouble breaking out of, I would say, that $39.50 range, but that came where we hit a high of $40.84. That was the high for today, and really for the 2/3 of the entire trading day, we were relatively flat, guys. So that's totally fine. The biggest thing is I absolutely love this consolidation here until close today. That was really good to see. And of course, closing above $40. I know it doesn't really mean much, but it's more of that psychological level. So I love to see that. And of course, the overall market was relatively flat today, and AMC was up 8.92%. So guys, I'll take it. Green is green. So we'll just definitely take a quick look at some other charts. This is the 1 hour chart here. And as you guys can see, flat for the day. Well, besides from that gap up in the morning, yes, relatively flat. I do have a few new lines of support and resistance. And really not too much. I don't want to go too crazy with the TA and have crazy lines drawn all over the place. So really 37.15, as we said before, is now acting as that area of support for us now that we broke through. And our next area that we've seen heavy resistance for in the past has been that $50 range. Of course, this has acted as support for us in the past, especially in early June and early July. So I'd love to see us start pushing back up towards that range. But guys, AMC, of course, loves to trade in the middle of big ranges like this. So very curious as to what's going to happen. And guys, we could even put one more level of resistance here at just about $42. But of course, that really hasn't held too strong in the past. So I'm going to leave that off for now. But that would be price predictions for tomorrow. I think a retest at that $42 range. And if worse comes to worse, I would say we could see us retesting that $37.15 support. So that's where I think the range will be for tomorrow. But of course, it all depends on the volume and the apes buying and holding, which of course has been so strong lately. Last chart we'll jump into here before we get into the new rules and regulations, guys, is the 1-day chart. Of course, this looks absolutely fantastic, guys. And this is really just a way for me to draw support and resistance lines. I really like using the 1 hour and 1 day specifically for that. But a few things to point here down on the technicals, guys. So MACD is looking phenomenal. As we can see, the past couple of days, the MACD has actually starting to get flat, but today, if I can zoom in more, it's actually starting to curve back up. So I know we've been talking about this for quite some time, but guys, this would be a very beautiful bullish reversal, which would hopefully bring us back up into this $50 to $60 range. So we'll definitely see if the buying pressure continues, and that would be very sweet to see. Guys, also, RSI, of course, RSI is one of my favorite indicators. My personal rule of thumb, guys, is anything above 50 on the RSI scale is bullish. Below 50 is bearish. So, of course, we did get rejected. This was July 20th. We got rejected at 50 on the dot. But, of course, guys, we're actually making a slight move up now. We started that downtrend, but tail is picking back up. Currently sitting at, just call it 47. But of course, if this buying pressure continues into tomorrow and Wednesday, we can actually break back into 50 and of course continue that range. So guys, just to show you this, here is 50 right there. And as you can see, once we break into that range, we do have a nice run up. And of course, if we can stay in that range, that's where that buying pressure continues to pour in, usually at to about that 70 range. But for AMC, guys, we like to run when we are already in the overbought region. So definitely don't panic sell when RSI is above 70. Just because it's overbought does not mean the buying pressure is going to slow down. So that's one thing to keep in the back of your minds. But really the bulk of today's story is SR Nscc 21-803. So of course, guys, these documents are incredibly long, and a lot of it is really just clearing up some formalities with the text and the wording of everything, because of course it is legal documents. So we are not going to go through all of this. We're only going to go through a few major points, guys. So I do have highlighted here, and I'll post this article in the comments section below. Feel free to take a scroll through this entire post and of course all of the comments down below. Definitely really interesting stuff. But really the bulk of it is what we're going to cover right now. So Section 14 of the proposed Rule 56 would establish Nscc's procedures for when it ceases to act for an SFT member. And guys, if you don't know what that is, take a look at my video that I posted earlier. Sorry, I can't remember the exact date, but it was sometime on the weekend. That's where I go into the SFT members and what all this means. I just don't want to be too repetitive in my videos. So definitely take a look at that. It'll be posted at the end of the video. With open SFTs, including recalling a non-defaulting SFT member that is a transferee and liquidating the defaulting SFT member. So of course, a lot of hoopla, but what does it mean? Key thing, guys, liquidating. So that is really, really interesting. Buying in or selling out as applicable some or all of the SFT securities that are the subject of each SFT or the SFT member that has been novated to Nscc, but for which the final settlement has not occurred. So guys, this is right here, I personally think, and same with the writer of this article, this is talking about failure to delivers here. And of course, they didn't want to put that in there in the plain text, but we'll read this quick little summary. Sounds like the NSC can say, yeah, you can read this word right here, this, we're not handling your transactions anymore, and begin closing out the positions that they have already novated. And someone correct me if I'm wrong here, but the last line sounds a lot like exactly what I said. We can close your FTD positions if we decide to stop messing with you, which of course is very fair. Last couple of things here, guys. Sponsoring members' accounts get a little more exclusive. Nscc takes over the novated positions, but can choose to close out or take on. Of course, we're not financial experts, but this is just the opinion of overall community, guys. So, guys, what it is they're taking on too much risk. We are going to liquidate you. The failure to delivers in all of this stuff. As we know, guys, I'm not saying that this is going to absolutely blow up AMC and GME and all of the other meme stocks. This is more regulations to put in place because I believe what the SEC and all the regulatory bodies are doing is they know this squeeze is going to happen, so they need to put these actions and rules in place to have an action plan, a disaster recovery plan for when this does blow up. So that's really all that all of this data is and information is showing us. But of course, guys, this is definitely in our favor regardless of what anyone wants to say. So I always say take these new rule changes with a grain of salt, because regardless of if it's written on paper, we know this all too well, it's a different story when it comes to actually enforcing a lot of these rules and regulations. I say that because that's typically what's been going on for the past 6 months, but don't let that get to your head, guys. I really think that they are doing something to prepare for this mother of all short squeezes. One thing too that I've been seeing float around, and something that I've covered for in my last video too, was they might try to stretch the MOAS over weeks or months to try and limit the impact. So I know a lot of you guys did not want to hear this, and it is what it is. I'm really kind of in the middle of both sides. I really understand that, you know what, regardless, this could happen over a 3-day period. But guys, it's really good to prepare for both sides and really both options of what could happen. So why do we possibly think this? So in section 17A of the proposed Rule 56 would provide that if a corporation default occurs persistent to section 2, Rule 41, yada, 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 all SFTs that have been novated to Nscc but not yet settled, and all obligations and rights arising thereunder which have been assumed by the Nscc to proposed Rule 56, here it is, shall be immediately terminated. And the Board of Directors shall determine the aggregate net SFT closeout value owed by or each SFT member with respect to each of the SFT positions. So guys, it's not something where they close it out, it's done deal, it is what it is. No, this is going to take a little bit of time here. And I just skimmed through this way too fast for my own brain. But they pretty much, the Board of Directors shall determine the aggregate net SFT closeout value. So of course it goes for review, gets pushed to this board, the board makes a decision, and then it gets put into effect. Corporation default, well, twist my tits, SEC. That's something you read a lot on Super Stonk here, guys. Definitely give this page a follow because really, really smart apes are posting in this community. Let's see what we got. Sounds like a default is treated much more harshly than the NSE deciding it won't process transactions anymore. Immediately terminated sounds like rocket fuel to me, which of course it is. So guys, that's really all I have for today's video. Really the big thing is no dates, no hard dates. That's really the biggest thing, guys, because of course this can go one of two ways. Yes, they can prolong this squeeze on one side of the belt, and on the other side, you know what, this could happen tomorrow. And I'm not saying it's going to happen tomorrow, but we have zero idea when this is going to happen. All we have to do, and it's the absolute easiest thing, and especially since we've bought in at, most of us have bought in at $11, guys, hold the line. If you want to buy more shares, buy more shares. That's all you have to do. We don't have to go crazy with the options because we know the shit show that's been going on with options and the price manipulation. So just buy shares and hold shares. Of course, I'm not a financial advisor and this is not financial advice, but I am personally holding the line. I've not sold one singular share since I bought in January. I've only been continuing to buying, and I know all you apes are out there doing the same. So guys, that's all I have for today's video. Hit that like button and subscribe for more content. Peace out.